Hi everyone, hope you're all doing well. Today we'll just have a quick update for you guys. We've got 3 stocks to talk about really quickly, a bit of a short one today. But overall, yeah, I mean the market is very red out there, isn't it, today? My account's taking a little bit of a break from the rally that it's been on, and I'm sure most of you guys are seeing the exact same thing. But hey, don't panic, this is good, this is good. I know people don't like me saying it when the market's down, but we need to have a bit of a break here, a bit of a down couple of days. I mean, the S&P is already up, what is it up to year to date? Nearly 10%. So having a bit of a red day today is good because we don't want to get too ahead of ourselves. We've seen it before. We can't just keep going up all the time. If we keep going up all the time, that will lead to a major overvalued market, and that can snap back pretty aggressive and can hurt you big time. So yeah, a red day today, but definitely well needed. So don't panic too much. What is having a big red day is Tesla. Now I'm going to say, I'm recording this video, the stock is down 5%. I cannot believe it's down 5%. I think Tesla today should be down more than this. The news that Tesla have just delivered is bad. And I would expect any other stock to be down over double digit today. So I'm really surprised to see this stock holding up. But yeah, the news for Tesla just gets worse and worse. So they reported their delivery numbers, and looking at BYD's numbers were actually not too bad. Looking at Tesla's numbers, these were terrible. So this is the first time deliveries have actually gone negative. So they actually fell 8.5% from the year ago quarter. This is the first time this has happened in 4 years. The last time this happened was during the CEV situation. And obviously the reason why that happened is because the world started shutting down and people didn't want to order cars. People didn't want to go pick up cars. People didn't want contact with people. So the fact that this is the first time it's gone negative since that time frame shows you how bad it's starting to get for Tesla. And even for me, I'm currently looking at Tesla, is this getting close to a buying opportunity? And this actually makes me, once again, I originally said that Tesla for me is 150 where I'd start considering. The news is actually getting even worse than what I was predicting. And this is where I start going, you know, I said 150. I actually start thinking maybe I need to go down to about $130 here because it just keeps getting worse, the news that's coming out here. So they were expecting deliveries of 457, and I saw more people. I think the consensus is that analysts are going a little bit too high here. I saw a few people going 430. I saw even like the biggest bears out there going like 410. What they actually came in with is 386. Their production to deliveries was a massive gap. This is not good. This is showing that there's a problem here. The Tesla are not getting shifted their cars, and it seems like if you're doing these numbers, there's probably more price cuts coming to try and shift them on. More price cuts mean lower margins, which means lower profitability. Now, Tesla have done okay previously by cutting and cutting and cutting, but we've seen the profitability get impacted. It looks like that's only going to continue at the moment, looking at these numbers. And the fact that there was that big of a miss, I really expected more of a negative reaction than that. And I was looking at what analysts were forecasting, and they've actually been pulled on the Yahoo Finance, which Yahoo Finance is getting. Used to be such a good site, Yahoo Finance, but I feel like the data is so slow getting updated nowadays. It's a bit disappointing, but they're expecting the EPS to go from 0.85 to 0.6 in the current quarter. The actual estimate is now starting to go down for the EPS. So the thing is, you start looking at 38 times earnings. Realistically, this is now going to be trading up to back up to the 40 because of the drop in the earnings that's going to happen here. But you can see here that analysts for the current quarter are currently expecting 24 billion in revenue. Now, I was actually looking at the previous quarter, and the previous quarter was 23 billion in revenue. So analysts are still expecting Tesla to grow in the next quarter. I think of these delivery numbers, yeah, they might have still be growing if they were coming at 550, 540, 530, even 510. I've got to say, with these delivery numbers at 386, I think Tesla is going to be set for a very bad Q1. I would expect the EPS to be a bit of a miss, and I would expect the revenue to probably be lower than the expectations here of 24 billion. I would expect the revenue to actually come more towards the 22 billion markish right now after these numbers. So this is a big decline, and that's why I'm surprised it's not going a little bit lower than where it is. And I think if anything, this probably suggests that the Q1 is going to be weak, and I think that we probably will see a drop in the share price once again when we get to Q1 and then we report their earnings in Q1. But I think overall, I mean, next quarter there's 6% growth expected. This year 10% growth expected. I think once again we're going to see big analyst downgrades coming on in the next kind of 12 months here on this one, and I think that I was considering buying at 150, but these numbers are even getting worse than what I was expecting, and I actually think now that 150 price target, I might even have to lower it even a bit more than where it is right now, because yeah, it's getting it's not getting good there at the moment. So yeah, Tesla having big issues today, and I'm surprised not to see the stock down a little bit more than where it is. Walgreens, not a bad day today, but yesterday, what a drop that was. Yesterday the stock was down nearly 10%, and it's crazy because it actually didn't come on the day of earnings. It came on the day after the market opened up after earnings, and I can't really find an exact reason why it decided to do that. The earnings themselves I thought were okay. The revenue was a beat, as you can see here, beat by 1.2 billion. The EPS was beat by 0.38, which is obviously really good beats, as you can see here. The guidance as well wasn't too bad as well. So yeah, I mean, the only thing that was on the conference call is that they said that if the economy keeps on being weak, we might see a bit more of a downgrade on our bottom line. Nothing wrong with a bit of sandbagging and preparing the market for that. But I looked at the numbers and I was looking at this is a company that's putting in good turnaround numbers here. The sales was still growing in the right direction. They're still trying to ramp up the profitability. The healthcare segment wasn't too bad. When you look at the healthcare segment, they're starting to move that into more profitability and turning that around. I looked at the numbers and I thought, for a company here that's currently 5 times forward earnings, you're going to be picking up whatever the yield is on here, 5% dividend yield. I thought we're seeing all the green shoots for a turnaround. There's still plenty of room to go, don't get me wrong. But I was like, for what you're getting here, it's definitely worth it. And I thought we'd see a bit of a bottom here. But yeah, the stock still continues to push lower, which I was really surprised about after those numbers. So yeah, I did take a little bit of a nibble on that one. PVH, so this is stock that's down 21% today. And it's one to watch, because if this gets to $50, $60, it's one that you might see me buying. So I'm watching this. If the weakness continues, I might buy some shares. So obviously it's got a fair bit to go to that, but it's one to watch. They own good brands though. They own Tommy Hilfiger, Calvin Klein as well. So yeah, this is one that I'm definitely keeping an eye on here. 12 times earnings at the moment. Like I said, I'd like that probably to get more towards an 8-7 times earnings. But it's one that I actually looked at. Funny enough, I was during this time frame in 2020. It's the world started opening back up again, and I was actually in a Tommy Hilfiger shop at the time thinking, I don't know if I should buy some shares in these. And I was noticing how low the share price was, and I was like, people keen to get back out shopping, and these brands will do very well, especially if people have money to spend. I never bought it, and I probably should have done. The stock has performed amazing since then, even with the drop in that's in today. But yeah, if there's a bit more weakness, it could be one that's to keep an eye on. But I thought I'd just mention that. But the big thing that I wanted to mention is once again that we're seeing the weakness in this luxury market. Like the economy is getting weaker out there. If we don't get these interest rate cuts, I think it could be a worry for where the market is. If inflation doesn't start coming down and we get those interest cuts, it is one to be worried about. It's one that I'm starting to think that I need to start getting that cash pile up a bit. I think my cash pile's probably around about 4%, which is nowhere near where it should be. I should be up to probably about 10% cash right now. So my cash pile's a bit behind where I should be. And if I keep seeing these signs of a weakening economy, it probably should be more towards a 20% cash pile. So I'm keeping a really close eye on this, but I'm seeing a lot of weakness out there starting to really creep in now. You look at PVH at the moment. I mean, EPS was a beat, revenue was a beat, but they're not growing. And then you start looking at the guide for this year. Revenue predicted to decrease 6 to 7%. That's a big downgrade, or big decline as well. Look at the EPS, projected between $10.75 to $11 from the consensus of $12. That's a big 10% downgrade on the EPS side of it as well. So I'm looking at a lot of these businesses here, and they're seeing the spending start pulling back a lot at the moment. So yeah, it seems like the economy is getting a lot weaker out there without those interest rate cuts. And the big thing is that the thing with the interest rate cuts is that we can get used to higher interest rates. We've had an interest rate environment which has been, so low, but now we've shot up to, 5% interest rates. Is that we could get used to 5% interest rates, but the problem is you can't go from so low to so high. And so quick. That's the big thing. That's why we would be able to adapt to maybe a 2-3% environment, but to adapt to a 5% environment, how it is so quickly, it looks like it's starting to take the toll on it a little bit. So yeah, thought I'd point that one out because it's just another example of weakness that's starting to form out there a little bit. And I'm seeing where the valuations are at, and then the weakness around the economy. I just keep thinking, I've got an okay cash pile, but I'm starting to think maybe it needs to be a little bit higher than where it is at the moment, because these the cracks, I think, starting to show a little bit there. So definitely something that I'm watching in the background anyway. So yeah, 3 updates. Tesla really struggling out there. Walgreens getting crushed on what I thought was a decent quarter, showing the green shoots of a turnaround. Still plenty of room to go, but the turnaround is there. And PVH showing once again there's a lot of spending tightening going on at the moment with this higher interest rate environment, and that a cash pile might not be, or starting to build a cash pile would maybe not be the worst thing out there anyway. So yeah, hope to review you guys. See you in a bit.